Saturday, August 19th, 2:41 p.m. New York time. Review for the past week. There was big panic selling this week in the equity markets. Looking here at the one-year chart of the S&P 500, stock symbol SPX. Each candle's a week. Look at that big red candle. Made a lower low, lower high. Current trend is down. We are inside this consolidation and above a demand zone. Here's the high for the year. NASDAQ 100, red, lower low, lower high. Near the bottom of this consolidation. Also broke below that consolidation here. Dow Jones Industrial Average, red, lower low, lower high. Broke below this consolidation. Look below midpoint here. Yep. And tested below. This was an impulse move up, which was a breakout from here. We tested it. Buyer stepped in there on the down. There's a high for the year. Dow Transports, red for the week, lower low, lower high. Also broke below that breakout there. And buyers stepped in. So you had some buyers stepping in on Friday near the end of the day. Maybe they think the market's going to go higher Monday. It may. And it may have a trace up and then another hard sell-off. Dow Jones Utilities, red for the week, lower low, lower high, made a new low for the year. Yep. Small trading range. Takeaway of all these major U.S. stock indexes, they all closed red for the week. They all made lower lows, lower highs, confirming the trend is down. Also, you see the trading ranges of them all. The past several weeks, many of them have been red. And if you notice, on the current candle of this week, you have many of them with smaller candles or smaller bodies or big wicks on the bottom. Yep. The buyers are feeling comfortable to step in, buying down here, even though the trend's down. So that means the bears, the panic selling could be getting tired and we have a reversal soon. The S&P 500 stock index here on the top left, again, the NASDAQ 100, the Dow Jones here, the Dow Transports, and the Dow Utilities. Those four indexes, plus the S&P 100, are inside, make up the S&P 500. Got it? But the Russell does not. So this S&P 500 stock index also has sectors in there. Those sectors. We're going to look at those sectors. 11 sectors. Going to go in order. Order being the largest ones, the ones that are weighted average the most, the S&P 500. That first one is XLK. XLK is technology sector. Makes up more than 20% of the S&P 500. Huge consolidation. Here's the high for the year. Again, red, lower low, lower high. Smaller body, wick on the bottom. Again, this impulse move up started this new consolidation. So we did almost 100% retest of here. Yep, buyers are feeling comfortable buying in here. Next one, XLV, healthcare. Makes up almost 15% of the S&P 500. And look at this. Inside candle for a week. Indecision. It didn't know to go above or below that prior week. So again, that's not bearish. That's not bullish. That means indecision. The trend is not down. It's also in a consolidation here near the highs of the year. Yeah. Healthcare. Trade idea. Look for that breakout. Could be the next trend. Set your alerts on the high and low of this past week on this stock index. XLF financials makes up 13.7% of the S&P 500. Financials abroad, that's your insurance, your banks, your mutual funds. So broad. Red, lower low, lower high, big sell-off versus these past 3 weeks, which were distribution. There's a high for the year. It's a low for the year. XLY Consumer discretionary makes up 10.2% in S&P 500. Broke below and closed below this consolidation, which was the high of the year. Distribution was occurring here. XLC, communication services, 9.9% S&P 500. Tight consolidation. Here's the bottom of it. Buyers are stepping in here again. XLI, industrials, makes up 9.7%. Red, big sell-off. Lower low, lower high. This is consolidation. Again, that big impulse move up there, consolidation breakout. That's what we're doing. We're retesting this. Makes sense. The buyers stepping in there. XLP, consumer staples, 6.7%. Here's the low for the year. Here's the high for the year. So we pretty much have this whole consolidation. That's it. It's just doing retest. Down here, there are buyers, demand zone buyers. They're stepping in here again. Natural retracement. XLE, energy, makes up 6% S&P 500. Another inside candle for the week. Look, here's the high for the year. Here's the low for the year. The current trend is up. Again, I'm showing you these sectors because you don't have to buy the big stock indexes. You could buy the stronger sectors inside the index and you'd be outperforming it. Very nice. XLU, utilities, makes up 2.8%. New low for the year. Loser. XLRE, real estate, makes up 2.7% S&P 500. Here's the low for the year. Here's the high for the year. Huge consolidation. So again, buyers testing it. Got going on. Apparently, buyers are still buying residential and commercial property in many parts of the United States. Even with higher interest rates, they're willing and have the capital to pay the higher monthly mortgage payments. XLB, materials, makes up 2.5%. Here's the high for the year. Here's the low for the year. The trend is down into this consolidation. So of all these sectors I showed you, 11 sectors, they are not all trending down. Nope. Several of them hit new lows for the year. So those are the losers. Those are the ones to be shorting to trade bearish. And the ones that are not making new lows, consider those the stronger ones. Because again, I showed you the equity markets indexes are selling off. And when you have a stock or stock index performing better, well, that's coming into leadership. So we'll trade ideas here at the end. Again, these might be short-term, day trades, swing trades, or this might be a long-term investment to stay on top of. Well, now we're going to go look at the Magnificent 7, which used to be called FANG.